Welcome to Talk Tickers, where we break down the latest earnings calls. Today, we're slicing into Cheesecake Factory's third quarter results. And this one is a classic story of profit versus growth. So let's get into it and figure out what's really going on.
Okay, so here's how we're going to tackle this. We'll start with the headline numbers, then we'll dive into management strategy, see how the market reacted to all this, look at the guidance and headwinds, and then we'll wrap it all up with our take. Let's do it. First up, the Q3 snapshot. And right away, we're seeing a story with two very different sides. On one hand, the company delivered a solid beat on profitability, which is fantastic. But on the other hand, they fell just a little short on the top line, on revenue. This is that classic tug-of-war that really gets investors talking. So let's look at the good news first. Adjusted earnings per share came in at 68 cents. That's a strong 13% beat compared to what Wall Street was expecting. A really solid number.
However, here's the other side of that coin. Revenue was $907.2 million, and that actually missed expectations by a narrow but significant 0.6%.
So here are the key figures all laid out. You can see that divergence plain as day. The earnings beat, which was driven by some really good cost control and slightly positive same-store sales, set against that top-line revenue miss. That's the whole story right there.
So how did they pull off a profit beat with softer revenue? Well, let's move on to management's playbook and see how they did it. Management, of course, framed the quarter as a success. The CEO, David Overton, emphasized their execution, calling the results solid in what is, let's be honest, a pretty tough environment for the entire restaurant industry right now.
Their whole focus was on the fundamentals, a strategy of just blocking and tackling, really zeroing in on what they can actually control.
And you can see this strategy in action. They managed their labor costs really effectively, partly by improving staff retention. They successfully rolled out new menu items like bites and bowls to drive sales, and they kept their growth pipeline right on track. It all points to really strong operational strength.
Okay, so if the internal execution was so strong, the market's reaction tells a completely different story.
And this brings us to the key question investors are asking. It's pretty simple. If profits beat expectations, why in the world did the stock fall?
The reaction was pretty swift. The stock fell immediately in after-hours trading, and then it just extended those losses by about 5% the very next day. Definitely not what management wanted to see.
This slide really highlights the disconnect. You've got management celebrating all these controllable wins, cost control, margin improvement, but the market was way more concerned about that revenue miss and what it signals about future growth, especially in a slowing consumer environment.
And looking ahead, management's own guidance actually confirmed some of those market fears.
Their Q4 revenue guidance implies about a 1% step down in traffic from Q3. So what they're saying is, yeah, we expect this consumer softness to continue. And they also highlighted a few key headwinds on the call. You've got persistent consumer caution, specific cost pressures coming from beef, a difficult comparison on insurance costs that's going to weigh on margins, and of course, increased competition.
So let's put it all together. Here is the next call from us here at Talk Tickers.
We are rating the stock market perform. Look, their strong operational execution provides a really solid floor here, but those top-line pressures in a weak macro environment are likely going to limit the upside, at least in the near term. Now, the trade idea here is for a more aggressive portfolio. You might consider a pairs trade. Go long cake for its operational stability and pair that against a short position in a competitor that's more exposed to traffic declines and has weaker margins.
And that's our take on Cheesecake Factory's third quarter. This is not financial advice.